What is going on, everyone? What is going on? Good morning. Good morning, everyone. A little bit early, but let's wait a little bit. Let's wait for everyone else. What is going on, everyone? Good morning. Morning, good morning. Let's fuck shit up this morning. Right? Let's fuck shit up in the charts. Right? I am so excited to trade today. Can't wait to talk about the markets. Right? This quarter's been amazing so far. Amazing, like really good. And I'm gonna just wait a little bit for everyone else. Now you're gonna wait a little bit just for everyone else to get on. I hope everyone else had a great quarter just like me, because the market's been crazy this quarter. Since September, like it's been wow, wow. Like the, the levels I just respecting so nice. Just everything about the charts, everything about US 30 has been great. Fuck it, I'll just get started. All right, guys. So a few weeks ago, I don't know if you guys remember, but we talked about this was side. We talked about this weekly gap, but we was looking at this weekly gap of it being bullish, right? This weekly gap right here. Why did I have my focus on this weekly gap specifically and really felt good about this one? Because this is the same weekly gap caused by election week. It makes a lot of sense that the market went so bullish after November 2020 election week, right? The week of election was like what, November 4th, somewhere along those lines. That entire week is very important. This gap that it created in price is very important, because it's a weekly election week. And just from the seasonal seasonal tendency charts, it was already saying that October is going to be bullish. If you would have just went with that, just look how it just respected that weekly gap. And I can send you the recording back from like September 28th, like that last week of September. I was really talking about this a lot. Like, yo, we're in this weekly gap. It can very well go bullish from this level. If anyone wants that recording from that last week of September, let me know. Because we did call this market out. Look how just respected that weekly gap, and bam, this was an institutional play. Like, there's a lot of money involved here. 2 years ago, there's a lot of money that was put into the markets here. And because price went back to those levels, like it bring a lot of interest back in the market. Look how we just ran out this weekly low, came back to this weekly gap from election week. Right, that's so important. Right, that is so important that we make that analogy right there. That this is an election week gap. Bam, gap right there. And go on a smaller time frame. Right, look at all this that it did in that weekly gap. Right, came to it twice. Right, look at the first insane rally. Came all the way to the low end of it, insane rally, and it came right to the day after FOMC. That high is very important as well. Right, FOMC is gonna hit that one day at 2 p.m. and then that next day, that high is important. So day after FOMC, bam, hits that high. But look at the play right here. Complete fill on the weekly gap, goes all the way to day after FOMC. Then price goes right back down to it. And it was kind of setting up for the new month. But you can see this is October 2nd, right? The new month just started off bullish. They wanted to trap some buyers. They didn't want no buyers. And you got look at how price is playing off from the beginning of the month to like it to the end. Right now it's October 24th. So in the beginning of it, it kind of wanted to trap those initial long holders. So it goes bullish, traps them here, takes out the liquidity right here, takes out the sellers. Now it's just focusing on taking out the sellers, and bam, takes them out here. Price goes right back to that area of fair value, goes right back to that weekly gap. Right? This is why you don't want to trust what you see on the news so much. Because I'm telling you, everybody, even when I'm looking online, people coming to me saying, yo, the market's bearish, it's bearish, this and that. Price action is so much more important than what these people say on the internet, what you read online. It's so much more important reading actual price action. Because if you read actual price action, you would know they just back inside of a weekly gap. And it should respect it if we're in a bullish trend. Maybe it can go a little bit below a weekly gap because those are things that happen as well. Like sometimes it's gonna go a little bit below the weekly gap, find another area, and then shoot up. But the whole focal point is this weekly gap here. Everyone was saying the market was bullish here. I was probably the only one saying the market was bullish. I was probably the only one who said that. Right, weekly gap right here came right to it. This was a wash on liquidity. I'm sure everyone remembers this drop right here. This was a CPI reporting from what I remember. It was basically measured inflation. Look at this crazy sell-off it had. This was a wash on liquidity for all the buyers. This was trying to give the sellers a little bit confidence that it's gonna, right now I'm just putting a narrative behind price. Something I said last night, I'm just putting a narrative behind what happened with price, a storyline behind price. It's important to have a story behind price, like make your own kind of story and narrative behind price. That's what I'm doing here, right? So we can see it just trapped a lot of short sellers. What's going on? But so it just trapped a lot of sellers right here, and then went down and then went crazy bullish, right? Crazy bullish right here, and then from last year, remember this week I was already targeting FOMC high. That was my next target. It already took out day after FOMC high. Now the actual FOMC high set at 2 p.m. on September 21. That was my focus point after that. And remember what I say as well. Just because we're in a bullish trend, not every single day is going to be an up day. Not every day is going to be an up day like that. Like it's gonna be, you can't ignore these 300, 400 pip drops. Like you can't. That's why in these lives, like that's why sometimes we're selling as well. Like we're selling as well because you can't ignore these 300, 400 pips price swings to the downside. But overall, the direction is up. And we can't ignore these 300, 400 pip moves to the downside, right? Right, so you can see what happened last week, right? All we did was targeting FOMC high. They already hit day after FOMC high. Get some water. Right, so it hits day after FOMC high, then the actual target is actual FOMC high. Talk a little bit what happened last night with the markets. Right, last night, like if you're following the logic here, right, you would have easily saw this by yourself when you was trading London. Because look at this open week volume bounce. You already know I'm always marking this level up in my charts. Always. Open week volume bounce, just like this. Volume and bounce, skip and price. What's the logic? We have to see bold bullish closes below the volume and bounce and trade time and price. Right? So you can see the times on these candles. It's not quite 3 a.m. yet. But if you're really trading in real time, you would logically wait for 3 a.m., right? You would look for something at 3 a.m. You're not looking at the charts at 1 a.m. You're not looking at it at 2. You're going to look at it like 2:30, 2:45, trying to find an entry for it 3 a.m. Just how we look for entries at 9:30. This is how you do 3 a.m. 3 a.m. is the London Stock Exchange open in London. Okay, so it's very important. And that's why, US 30 is trending around this time. You might find a lot of setups with UK 100. I don't really trade UK 100, but you can do that on your own time. Just backtest UK 100. That is an indice for the London Stock Exchange. Anyway, open week volume bounce right here. You would when you're watching this live, you would look at this gap right here, right? You would look at this gap and you would probably be like, all right, I want the market to go. And I know it went a little bit above it, but look at this. But you have to always trade with a plan and have a strategic approach, right? So you would sell right here in the low end of that volume bounce and gap, but your stop loss would have to be above the volume bounce. That's how you would have stayed in this trade. You would have probably ended a little bit of drawdown, but that's just it's just normal with US 30. Like, you just have to know what you're looking at to actually feel good about the trade. You might be a little bit in drawdown. You might not always get that sniper all the time, but knowing what you're actually looking at in price is very important. Right? You would have put the stop loss a little bit above here, and then bam, that's your sell. Yeah, we're in a bullish trend, but like I said, you cannot ignore these 200, 300 pips price swings. You can't ignore that because this is a whole trade. People can pass accounts. But the whole goal is to pass challenge account, right? That's why we're on these calls. But that's the whole point, right? So bam, sell right here, easy, 250 pips within a few minutes, right? So right now I'm bullish, right? We closed above the volume bounce, right? While I was speaking, respected this high end of that volume bounce to continue pushing higher, right? It's still pretty early. It's only 9:58. I probably have to repeat myself a few times for the new people coming on, but it's whatever. More review, right? It's more of a review for me. Just repeating myself. It's more of a review for me as well, because I have to go over the charts again. So it makes me have a solid understanding as well. So I don't really mind. I don't really mind doing it. Wait, look at this volume. Look what happened. We didn't trade last Friday, but look at this insane clean setup. This is a volume imbalance I have marked since October 19, right? Volume imbalance. You don't delete any kind of volume imbalances off your charts. This is a volume imbalance from October 19. Then we're on October 21. Right? October 21, right here. And look how price. It's much more clean on a 15-minute. It's on a 15-minute. Look at it with the naked eye for a second. Look at this gap right here. That it's a pretty big gap. But to pinpoint your entry, you would have had that volume imbalance marked on your chart, right? That October 19 volume imbalance just a few days ago. Right? Volume imbalance right here. Look, 10:30. That's your London close entry right there. London close. Look at the time. 10:45, 11. Time and price is key. It's key. Respected that volume imbalance right here. Bam, shut up. Bam, London close, volume imbalance. That's your trade. And plus that FOMC high still didn't get hit. Still did not get hit. Look at this FOMC high right here. FOMC high did not get hit. That's the logic you had to put into price. Like, that's the storyline. The storyline for this day was, it had to go to the volume imbalance, go fill in this gap to target FOMC high. Right, and also this high as well. You could take profit out of this high as lowest means of entry, lowest means of take profit right here. Right, that's already, a very decent pip count. Look at the pip count on that, 350 pips. Right, nimble enough to take profit here, then it would have been, 500 pips. But big price swings like that sometimes doesn't really matter if you know how to always get 100 pips out of the market, 200 pips out of the market. It doesn't really matter when you see these really big price swings. It doesn't, like, for me as a trader, it doesn't really matter to me too much when I see 700 price swings and I think I missed it with like 500 pips, because like I don't really care, because I know I can see setups like this every single week. Like this, you see volume bounce, close below it, came up to it, and then dropped. Like, I know there's going to be setups like that. And I know I can easily catch 200 pips with a lot more confidence and a lot more sure about the direction. Like, I'm a lot more sure it's going to sell right here. So I can put whatever kind of lot size I want in the trade and make money off of it. It doesn't matter. That's why it doesn't really matter if price goes 500 pips or something. You think you missed everything. You know what I mean? Like, it doesn't matter. Like, if you can know how to do this, like, you're good. Right? Volume and bounce, close below it. The same kind of logic I always say. Like, there's nothing I say different on these calls. It's no kind of new strategy or something. Like, it's really the same thing. It just experiences plays a big part of everything of how to look at certain levels, call certain levels. But and also some of you have to know how to use trading view. Like some of you don't know how to use trading view at all. And I figured that out last week when I said like, yo, someone send me charts of it, and then I have some people like Aaron, you're a big one. Are you in here, Aaron? Like it's kind of sad how you was in this, group for 3 months and you still can't mark up your charts. It's kind of sad. You sent me some bullshit charts with I don't even know what the fuck you sent me. That's unacceptable, man. Like you've been here for 3 months and I mark these levels up all the time and say it with all this, and this is what you send me. Come on, man. I don't even know what I was saying anymore. Like it's very important you guys know how to use TradingView. Know how to use it, knows how to use these boxes, how to, because if you can navigate through price fast, like navigate through it and like look at certain levels quickly, like that's gonna help you a lot. Like think about all the times you guys blew an account. Like did you have your charts marked like this when you blew an account, or did you have your charts marked your own way in some kind of other ridiculous way? Exactly. If you didn't have your charts marked like this, and then if you blew an account like that, then it was gonna, all right, let's see what you did wrong. But if you blew an account and you had your charts was looking like this, nothing on your charts like that, and you're just over here trying to follow me to the T. You cannot follow me to the T. It's not gonna work out. Like it's never gonna work out. If you like, you might get a good trade here and there. Like I call, I really do call really good moves. Don't get me wrong. Like I call moves, great moves live. I do great analysis live, but you have to still be able to do it yourself. That's why I'm giving you all everything. I'm giving you all everything of how I look at price and all that, right? You just have to replicate and just put the same things on your charts. See if you see the same thing on your charts. Trading is such an independent thing. It's such a, you have to think independently no matter what. Like think about this. Everyone was saying it was a sell here. I was the only one saying it was a buy to all my students as well. And it was just so much second doubting and this and that. But I was just going through the seasonal tendency chart. That's what I was doing. I was basing it off that. From my experience, I know that it kind of follows pretty accurately. It doesn't follow exactly, I'll be honest with you. It doesn't follow too exactly. Like this seasonal tendency chart, I sent it to you guys before. It doesn't follow too exactly, but most of the time it follows pretty well. It's a good like reference to look at. Obviously, still do your price analysis. Look, still gonna have its down days, up days. Pay attention to those swings, but I was really going off this. That's why I was kept saying, yo, it's bullish, it's this and that. We've been going bearish for so long, and you just can't pay attention to the internet too much of what they say about, especially when they talk about the stock market. Like don't listen to it too much when they talk about the stock market, and just look at your own kind of price action and liquidity points, and then you'll be fine. Like you'll be fine just not looking at news like that. Because look how bullish it went. Like this is 100% an institutional play. Like you can't deny that. Look how many pips it went from this weekly gap. No, I'm not much of a swing. Ah, excuse me. Not much of a swing trader, but this is a 2,500 pip move. Like from that gap, like from that weekly gap, Like this is insane. This is $1 million trade. $1 million trade right here. $1 million trade. This. Someone was smart enough to buy right here at the low because of a weekly gap, held through any kind of drawdown. Bam. But the thing about this 2,500 pip trade, like we had insane down days and up days. Like you had to watch your account. That's why, I'm not really much of a swing trader, especially with US30. I'm not going to swing trade US30 because you would have to end up being up like 400 pips and then being right back down 400 pips, then being down 600 pips and then going back up. I like day trading US30 more. I like day trading NAS more. It's a lot more comfortable to do. It's better. I like getting out, that same day. I like getting out within like an hour or so, 2 hours max. But yeah. Hey, if you don't know how to use TradingView, just go on YouTube, type in how to use TradingView tutorial. Like there's no need to come to me and say, yo, hold my hand through this, hold my hand through putting your charts just like me. First, learn how to use TradingView. Go on YouTube and do it. Like it's so easy. Go on YouTube, how to use TradingView, beginners. How to use TradingView for dummies. Put that on YouTube and then see what you learn. Know how to use the tools, know how to use these arrows, like find these arrows quickly so you can use it like that. Like, make it so you can see the price easily. Like, look at all this stuff I have in my charts. It's not so messy to me because I'm used to seeing stuff like this on my charts because I see it all the time. I mark it up all the time. I know what I'm looking at. To anyone else, this looks sloppy, disgusting. Like, what is all this? But I can go back to it just like this, and I can put a narrative behind price of what happened. You want to see? Look, bam, zoom in right here. Bam, I had a London high liquidity target right here, retail trend line. This is the narrative I'm putting in place right now. Retail trend line right here, pre-market for stock market open. We can see it respected at 8:30. 8:30 is a key time. Look how it just respected yesterday's open day volume bounce. I'm referring to October 19th. October 19th volume bounce respected the high end of it here, 1 minute gap, respected it for pre-market 9:10. Bam, had this rally to run out this retail trend line. Ran out this retail trend line. New York created a short-term high. And a short-term high right here. Price dropped back down. And this time I was, NAS was doing its thing on a volume bounce. It was respecting a 5-minute volume bounce to shoot up. And at that time, we had this push up right here. So, at this drop right here, most likely you want to sit on your hands a little bit because we already had this, insane rally up and this London high was still not targeted. So you want to sit on your hands a little bit to wait to see what happens. You see this impulse move up, 1 minute gap, respects that 1 minute gap to target London's high right here. Right, so that's all that mess you saw on my charts. This is what it is right here. Right, so you got to be able to have these unmarked charts, and it's not going to always look clean on a 15 like this, but you should know what you're looking at if you zoom in and analyze from left to right. Read price action like a book from left to right of what's going on. Right, just how right here, this how I'm marking up this volume balance right here. I'm reading price from left to right. Volume balance here, then reading it like a book. Right, then this happened at this time, this happened, gap right here, came right inside of it, damn, dropped. Right, notice how the bodies of the candles respected the volume balance, right? It had some wicking going on, but bodies of the candles ultimately respected that volume imbalance, and we had that drop. And I had that 250 pip drop. I think it's gonna go bullish from this volume imbalance here. I want to get more of a pinpoint entry. I don't want to just buy right here. Right. A couple of people getting on here. What is going on? Like we just did some analysis, a little bit of analysis on US 30, NAS, just US 30. We just analyzed US 30 a little bit. Talked about this FOMC high here. This FOMC high, all the market was trying to do was induce a lot of liquidity to go up to this high right here, FOMC high. I'm still bullish. I wanna kind of wanna target let's see. We are here in place. Wow, we can probably see price going all the way up here to this volume and bounce right here that I have marked from September 12. Yeah, yeah, I really think price can go up here. Obviously, not every day is gonna be an up day. Like people get it twisted all the time when I say that. Buying every day, then they see a 300 pip drop, they lose their account, and then they quick switch to bearish. Like they switch everything to bearish because of that little drop right there. Like for example, you see this right here. This was a 250 pip drop right here. They see this. Oh, it's not bullish no more. It's done. It's not bullish no more. That's it. It's doing it like no, man. Like it's not. That's not what it is. It's gonna have these massive up days, massive down days too. Wash out liquidity. Like it does things like that. And it's predictable. And it's also predictable as fuck. Like this was predictable. Volume and bounce right here, closed below it, came right to the high end of it. London offered that nice quick little entry inside of it. If you see a lot of speed in the market like this, it's a lot of speed, right? Right. So this is a lot of speed, right? Like how it just quickly jumped up here. Like that could have been like, yo, I like the speed. I like how quickly it went here. I could just sell right here. So it's predictable, even if it's a bullish trend overall. Things like a quick little move down, it's predictable. If you're playing, especially if you're playing off of volume bounce. Like I love volume and bounce plays because it's just so clean and one-sided at the time. Like if I was seeing this at the time if I was up for London, I would have really took this selling right here. Right. So and dropped a good amount. So I really think we can go up here to this, fill in this gap right here. That's a lot of pips away too, right? From where we're at now. If it goes all the way to the bottom, I saw the 800 pip move. No one's gonna hold a trade for 800 pips. Let's be real here. It's never realistic. I never like it's not gonna happen because you're gonna see as while it's going to the 800 pips, you're gonna be up 300 pips. Then it's gonna go right back down to entry, and then you're gonna get scared, close out, and then you're gonna miss the 800. So see what I mean? That's why I never care about these big 500 pip moves, 800 pip moves. I never really care about that because I know how to consistently profit off 100, 200 pips, hold the partial for longer. Like the partials really pay. The partials really pay. You can hold a 10 lot on your funded account and hold for 300 pips. That'll be $3,000 right there off a partial. Right. Well, depending on what account size you got, he's probably not gonna hold a 10 lot on a 100K account, but get the idea. If you have like a 300K account, then yeah, you'll probably hold 10 lot for 300 pips because you're already gonna take the partials out, so you're already gonna be profitable. Right, so this big little displacement is what I'll be looking at. September 13th, probably a pretty big news event that hit this day that caused this massive push down. September 13th. Let's go to Forex Factory for a second. All right, so today, oh wow, okay. We have a 9:45 news today. 9:45. So you know how I like to use these news. If price is gonna hold at 9:30 and we have an entry at 9:30, like I'm still gonna probably take an entry at 9:30 if I see something clean. But if it doesn't do anything, it's playing around or I get stopped out, 9:45 is gonna be what I'm really gonna focus on because this is a flash. Like it's a pretty big news. It's a pretty big news. So right? Red folder, we also have two, like an orange one, and then 11 a.m. London close is going to give a great entry. So whatever happens here, I lose, whatever, like I'm still going to be actively trading until 11 a.m. because of this news right here. Regardless if I'm not live anymore or not, like this, I'm still going to be looking at this right here, and you should be as well. Okay, and applying the logic that I always teach, right? Apply the logic that I always teach at 11 a.m. Right? Because look, 11 a.m. like when we give you a scenario, like a scenario like this, like I just went over Friday. I know some people just hopped on the call. Yeah, like a scenario like this where you use October 19 volume bounce right here. You see this October 19 open day volume bounce. And then you see how it closes above it. You see, I use the same kind of logic, right? Closes above that volume bounce, came right back down, and look at the time on the candle. 11 a.m. was when it had that final tap inside that volume bounce, and then it shot up. Right? We all see this, right? We all see this, right? And look at the time on this candle, 11 a.m. tapped inside that volume bounce, bam, shot up. That is something I will be looking for London close right here because of this news. Like something similar, it could even be a gap, but it just really depends on how it looks. Right, so right, I'll be looking at that 9:45. We have that news, so really look out for 9:45. I'm just going back to that September. What is it? September 13, 12 high. Let me see what news event hit that day. It was a Monday. September 13, September 13. Yeah, September 13 was when that high was set. So September 13, we are looking at a CPI reporting. And that is huge. That is actually huge because what happened in the last CPI reporting? The last CPI reporting was right here, right? Just saying this on top of my head right now. I'm gonna double check in a second. Right here was the CPI. What's the date? 13th. So September 13 was when, I guess every 13th of the month, we have CPI reporting because this was CPI right here, September 13. And then let's go to October 13 here. October 13. Bam. Bam, look, CPI reporting right there. Right, this measures the inflation from, we could just read it, change in price of goods and services purchased by consumers. Yeah, inflation. So it's pretty big news right here, pretty big news event. This is why we had massive drop here. This is why we had massive drop September 13. Makes sense? Makes sense. September 13, massive drop. Let's go back to it. September 13. Right here, look at the quick, fast displacement in price. It did the same thing again. Displacement in price like this. Bam, drop. October 13, fast displacement in price. Right, where is it? Fuck, I'm losing it. There, look. Fast displacement in price right there. And by the way, you see how I'm navigating through TradingView fast. You have to be able to use TradingView. Like I'm talking to a specific person here. Go to YouTube, how to use TradingView for dummies, and look at that and learn how to use TradingView. Right. So October 13, massive drop. September 13, massive drop. Easy. So now I'm looking at that same high that from that CPI reporting right here. This is why I think price can go back up here. And because a lot of traders are looking at this level too, right? A lot of traders do look at this level as a very key level. And a lot of people are trading it as well because they know a fast displacement in price happens. And a fast displacement in price happens here like that. This high is very important. And this is something that in the next, I don't know, 2 weeks, maybe, it can go here, but maybe in a week, because market really does move fast and quick. So maybe this week, moving on to next week. Because next week will be NFP week, so it kind of makes sense if it'll make sense if next week we go up here to this level and run at that CPI reporting high. How many pips is that? From here to this high, 1,400 pips. It doesn't mean every day is going to be an up day. Like I always say, it's not every day is not going to be an up day because of that. It's going to slowly go there, have its down days, have its big liquidity runs to make its way up here. When's the next CPI reporting? November 13, I'm guessing. Right, November 13. No, it's not. Let me see how often this news hits, because it is important. Right, so March, April, May, June, July. Ah, fuck, I lost it. Right there. I guess when that day comes closer, I'll look more into it. Right, it's not showing up here, but when the day comes closer, I'll be looking at the next CPI reporting, and I'm guessing it'll be next month because, like, looking at the reporting here, it does happen every single month, like May, June, July, August, September. So then we have October here, October, and then we'll have November. When that time comes, I'll be looking at that news reporting. Right, so CPI news is very important, measures the inflation, the price of all consumer goods and services. So it's pretty important. It's always a very fast displacement in price. Right, sometimes it's predictable. That last one, that the one two newses ago, 2 news events ago, like it just had a quick little run lower without going to an area of interest. But this one, the one that just passed, but I think this is the one I actually caught with somebody here. Is Austin here? Not Austin. No, he's not in here. But me and Austin caught this trade right here because it was 8:30. That's when the news was hitting, and it was so clean and screaming in my face. Like, look at it go all the way to the high end of that volume bounce. 8:29. So much time to enter the trade. Came right to the high end of that volume bounce, and bam, as soon as CPI reporting hit, boom. Very one-sided. When it comes to CPI reporting, it's very one-sided. It goes one direction, fast, quick. And once it moves, it doesn't really give you an opportunity to position yourself. So you had to do it a little bit before. Damn. So it looks like we're just running out the liquidity from that CPI. Like that's our target. That's a higher time frame target that we're going to be looking at. Higher time frame. This is what we're going to be looking at right here. This high right here is what I'll be looking at. And it's still, like I said, it's going to still have its massive down days that we can still profit off of. Right, massive up days as well. Like it's gonna slowly make its way there. And it always does it in an unexpected manner too. Look at all this bullishness right here. It always does it in a way where it's just like it did a lot of consolidation last week. Like it did a lot of consolidation on, Wednesday, Thursday, consolidated its way there. There's still a lot of tradable reactions, from what I just went over the last few minutes. Look, it's almost 9:30, 9:27 right now. Let's see what's up with the markets. See if we can pinpoint a level here. Like I said, there's that 9:45 news too that you want to pay attention to. So if you don't quite get that 9:30, nice little entry at 9:30, what's today's date? Don't get that nice entry at 9:30, then it's gonna be that 9:45 news, or maybe like that first 15 minutes of 9:45. All right. Right, so we got this coming out 9:45 red folder. Um, I would like a play off of. I'll feel a lot better on the trade if you have a play inside the volume and bounce. I just love volume and bounces. I'd rather have a play in here. Because maybe Monday, Tuesday, we can have drops. And then Wednesday, Thursday, and Friday, we can just go massively bullish to go for that level. So now I don't want to completely sign off of it being bullish for today. But we'll see. We'll see. I have this 1 minute gap here marked. I just personally would prefer a play in that volume and bounce right down here. Like even though I know it might go up here, but the risk that I have to take, like I'd rather just take a risk in here. But let's observe this 1 minute gap that the market is respecting off of. November 10. Okay. 10. So November 10 is the next CPI reporting. Thanks for my friend Uriel telling me that. Okay. 9:30 just hit. Um, no, I don't want to just jump in anything right now, so let's just wait a little bit. I'm observing this 1 minute gap here still. So the two levels I have marked is this little 1 minute gap, this one here. I'm not too certain in the direction right now, so I'm just kind of sitting on my hands. Let's just wait a little bit. Right? We didn't do anything yet. It's probably gonna be 9:45, right? This is really what I'm focusing on right now. Flash services PMI. And it looks like we had this for GBP today as well. I know I don't trade. I know I don't trade GBP USD. I'm just curious of how impulsive that news was, because I know a lot of things is going on in British right now in UK. I just want to see the displacement in price that it created at 430. It looks like the bodies of the candles respecting this 1 minute gap here that was outlined. The bodies of the candles respected that. I'm just sitting on my hands till 9:45 because I feel like that's gonna move the market like really one-sided, more clear in direction at that time. Like you see, if I was buying here selling, like I'd be very like uncertain. It's not giving the decent pips. It's not giving that good risk to reward yet. Let's wait till 9:45. Right, I'm just sitting on my hands. I'm just sitting on my hands till 9:45 till something clean comes along. Okay, so pay attention today for 9:45. I'll stay on the call for that. And then 11 a.m. 11 a.m. for London close. Very important. Right, we have this speaker over here. Right, like I said, I'm more concerned about the time of the news. Something I always say. More concerned about the actual time of the news rather than what the reports are. Wow, look at it. Respect this 1 minute gap here. Look at it just wick down right here. Then shut up. That's pretty nice to see. 70 pips. 80 pips here. Like, always pay attention to the levels that I always mark on my charts, like these 1 minute caps. Have it in your own, and you can always make your own decisions. And I'm teaching you all to be an independent thinker when I'm trading these markets. I'm give you guys the whole logic behind everything. You just make your own decision. Probably gonna go for this high right now with the speed. And damn, liquidity taken. Right, so the fact that 8:30, wow, you know what price is really looking like right now? You see how he just taps this volume bounce right here, shots up, goes 1 minute gap, goes up. Let's go back and look at this. Just look at this for a second. Look at this for a second. Look. Bam. You see how it just tapped the high end of the volume band, shot up, came to a gap and shot up. Look at this, what happened. Go back on your charts from October 19. October 19, look how it just goes. Look at same exact time too. Same exact time too. Look, 8:30, right? 8:32. Look how it is respecting that high end of that one bounce, shooting up gap right here. Respects the gap, shoots up for the high. Right? Same kind of price action model. Like picture this, implement this in your head, glue it in your head right now. Look at it, picture that in your head, look at that for a second. Just look at all this, and then now I'm going to go back to what happened today. Experience is so important in these markets. Like it is so important. Now look at this. Bam. Volume and bounce. Look at the same time. 8:31, 8:32. Taps high end of that volume bounce, shoots up. Displacement in price gap. Goes to right here, shoots up. Taps it right here, 9:33. Bam, shoots up again. Right, same kind of thing that happened October 19. Same kind of price action model, same thing that you're looking at, the volume and balance play. Volume and balance play, time and price with the 8:30, displacement in price, the 1 minute gap, Like you see how we're putting reasoning into price right here. We're putting reasoning into this, right? Bam, you get to see that respect right here shooting up. I really want to see what 945 does. Like that news is gonna hit in like 7 minutes. And I would have really called out that buy for all of you if that news didn't fuck with me with the timing and all. But any other time, I would have 100% called out that buy right there at that at 9:33. Just taps that high end of that 1 minute gap. If that news wasn't there to like distract me, because that news did after all distract me, right? But if that news never hit, I would have called it out with a little bit more confidence, like, yo, buy. You guys know how I do it. I've been like, yo, buy, buy, buy. But that news was just a little bit of a distraction for today. But any other day, I would have saw that 1 minute gap, and I saw this of how we just tapped it again right here at 9:33. After doing all this, after all doing all this playing around, 100%, 100% would have called it out for all of you. But this is why I'm teaching you all to be an independent thinker with these markets. I'm giving you guys these levels, and you build the experience, on top of the levels that I go over, on top of everything that I'm teaching you. Is build your own kind of experience, put your own spice into price. Because one thing with trading is it's really personality based. It's really based on like how your personality is. Like if you're an impatient person, if you like to get in and out of a trade, like it's really personality based. You know, It's massive drop right now. I have a 1 minute gap outlined here. I would like price to go down here to this level. Oh, nice, man. You caught that trade. Nice. Nice, man. My buddy Steve over here caught that buy. I've been working with him for a little bit. I'm teaching him the logic and everything behind price. And he's been learning. He's been learning a lot. That's good, man. That's good you caught that buy. I personally look, he made $1,000 today. 1,025 bucks. Let's go, man. I love to hear that. I love when I hear people making money. I love that. I love when people are winning. I love when people are getting into fire trades. I hate when people are losing. I hate when people are losing accounts. I hate that shit. I really hate that shit. Like I don't like when someone comes to me saying, "Man, I lost an account." Like fuck you, lost an account for you suck. That's what I'm saying in my head. Like you fucking suck. With all the shit that I taught you, you fucking suck if you ever lost an account. Like you are doing something so wrong to lose an account in 1 day. Like, oh my God, what are you doing wrong? And if you are probably losing your account in the day, maybe get a bigger account. Maybe get a bigger account and see how you do. Maybe you're stuck using that same kind of small account or something. Maybe you got a 100K account. You're always losing a 100K account. You're fucking sick of it. All right, try a 200K account. See how you do with the 200K account with that extra little bit of leverage. Like, because I'm not gonna lie, ever since I got this 300K account, I've been feeling invincible. Even with my little bit losses, I've been feeling invincible. I never traded a 300K account off the rip like that. This was the first time I did it. Like, it's the first time I traded a 300K off the rip. Like, it's in a 1 minute gap here. Time is a 9:43. Yeah, man, I've been really feeling invincible with this 300K account. Like, I feel like it's so hard for me to lose this account. You know what I'm saying? Like I'm already thinking I'm using big lots, and it's already feels like it's not doing anything. I think this is a good buy where it's at right now. Like it's in a 1 minute gap. Like I went ahead and just bought it right now for US 30. It's in a 1 minute gap. Like I wouldn't like it if price goes like over here. I wouldn't like it if price does this. Like I hopped in a buy right here. This 1 minute gap. It's about 1 minute till that news. So I hopped in a buy. I personally hopped in a buy in this 1 minute gap. Right, this 1 minute gap here. That news is gonna hit. I really hope it goes my direction. This news drop, it's gonna hit in like 30 seconds. But I jumped in a buy in this. I feel like this 1 minute gap is gonna be respected. I just hope it doesn't do no weird shit, but right now I'm feeling good about this buy. Oh man, look at this. Yo, I call these markets. Fuck you mean? Fuck you mean? I call these markets. Fuck out of here. Let's go. Woo! Woo! Let's go, motherfucker. Let's fucking go. I got US 30 by its fucking tail. You hear me? I got US 30 by itself. Close that. Close that trade. That was a great trade. Amazing trade. 160 pips like that, motherfucker. Like that. Like fucking that. Oh my God. I am up right now, man. I am fucking up right now. Holy fuck. Holy fuck. Holy fuck. Yo. Yo. Ah, what a roller coaster. Let's fucking go. Let's fucking go. You see, I feel invincible with this 300K account. I feel invincible. Man, this is amazing. I just closed everything out. I just made $10,000 today. I'm fucking lit. I'm fucking lit. Oh man. Oh man. What a way to start a morning, right? What a way to start the morning. What a fucking way. Where's my screen? Look at it. $10,000. Who's this? Time to cash out. Yeah. Yeah, I know I've been saying I'm gonna stop trading this 300K account, but like I'm running it up. I am running it up. All right, guys, that's it for today's call. I hope you all enjoyed. I will catch you all tomorrow morning. Enjoy your day. Good luck and good trading. If you didn't get into any trades, look out for 11 a.m. because there's a good 11 a.m. News going on today. So pay attention to that. That being said, peace out. I will catch you all tomorrow morning.